Let us jump right into it on this Friday. The market squeaking out some gains today. It finished out the week at new record highs as a pretty solid jobs number boosted investors' outlook. The S&P and Dow both notching all-time high closes as interest rates actually did something they haven't done much recently. They ticked higher, back above or back at 1.3%. Woohoo. So, did the jobs number give the Fed an all-clear signal ahead, Steve? When do you think that scary taper might actually begin?
Well, there's a couple of things. So you set it up perfectly. We had the last couple of days we've had political pressure on Powell to raise rates. Today we had better economic data, and hopefully, Brian, I know that this is not what we've been hearing, but hopefully we're coming to a peak COVID environment. I know it doesn't seem likely, but that's the one variable for me. So if we see Powell focus more on COVID and the Delta variant, then he does not have the all clear. He definitely has the ability to still keep rates low, but with all the things that you started off the show with and I just mentioned, he definitely should be, you would think, you shake up that magic 8-ball, you would think rates are going higher sooner rather than later.
Yeah, and by the way, I mean, it's anybody's guess as to where Delta goes. Tune in more at 6 p.m. Eastern, by the way. That's how we're launching the show with the reopening risk, talking to Dr. Monica Gandhi about it. But let's back this up here, Karen Feinerman. Okay, interest rates, they rose, but they're at 1.3%. Almost everybody we talked to just a few months ago was like, we're going to be at 2% by the end of the year, if not sooner. But we did go up. Is that an all clear to buy financials?
I hope it is an all clear to buy financials. I do own them. It's interesting, as you were saying, 1.3, that didn't used to be a lot. But, you know, we saw the 2-year, 10-year spread move a lot, which banks trade as if they're tied to more than their business is actually tied to. But I also think it was this idea of, okay, if rates go up, let's find stocks that don't have high multiples. And certainly the banks would be a place to look. So if you look at that value rotation out of the high flyers, and that's why even on an up day, you saw the IGV, which is the very high flyers, actually trade down. And FANG, the whole FANG complex, I think Facebook maybe eked out a gain, but Alphabet and Apple, Microsoft, Netflix, they were all down. So I think it's a little bit of a rotation. And if the rotation has any legs, then I think the financials are going to be a good place to be. I'm there. It's sometimes very lonely and painful. But, you know, I invite others to join into the bank rally.
Get off the wall, get into the financials dance. That is what Karen, it's like 8th grade homecoming. That's what Karen is saying about the financial stocks. Let's talk about another sector that's been in the news, Bonawyn, and that is, of course, the travel names. I call them the GOAT stocks. Get out and travel, because guess what? With new mandates and new restrictions in certain parts of the country, there's been a lot of people really worried about some of these names. Cruise lines, vaccinated passengers. Every time one tests positive, there's a bold-faced headline leading the news. What's your take on this sector? One to avoid or take the risk?
I mean, I think at some point you are going to have to take a risk because Karen mentioned it. I think Steve also mentioned it. We've seen this rotation on the back of Delta variant, that is, between like stalwart names that we come to think of as being quote unquote safe, mega cap, tech names that are going to kind of do well under any environment. Now we're kind of seeing that rotation. It was much more speculative in nature in cruise lines and airlines and whatnot. And even though we're seeing some return to normalcy on the leisure side, the business side still has a long way to go. And I think until we see that follow through, you know, there's still some risk to that. With all of that said, even when bookings return to pre-COVID levels, you've got to look at the balance sheet and enterprise values of these companies that are now all debt laden almost unanimously across the board. So I do think that you start to trade them because of rotation and because of headline risk and because this market is trading very much on the back of sentiment. That is very separate than valuation and investing. But the question was, do you kind of trade these? Does a risk start to make sense? I think if the thesis is that the rotation does have some legs, then I do think these underperformers are going to have some pop to them.
Yeah, about a third of the 934,000 jobs created were in travel and hospitality jobs. Tourists, travel, they are coming back. Chartmaster, Carter Worth, let's strip out the emotion, right? The charts are supposed to indicate what we all know and what the markets believe. When you look at the charts for the macro markets, it's been nothing but up, up, up. I showed on Worldwide Exchange the other morning, we haven't had more than a 5% pullback since October of last year. What are you seeing in your crystal ball?
Well, that's right. It's been a perpetual motion machine. When any area falters, a new area comes onto the field and picks up the slack. The notion of rotation, though, I mean, it was a very bad week for cyclicals. We know that industrials, materials, energy all underperformed the market, and financials, but for today's news-related strength, would also have underperformed. It imputes to the practitioner an ability to time that doesn't exist except in a few rare human beings, a few gods. This in and out, I got the cyclical trade, I didn't. I'm not into that, and I don't think most people have been successful in doing it.
Yeah, I mean, there's just so much out there, you know, and again, Steve Grasso, not to hammer it, but to your point at the very top of the show, you know, we hear so much about the variants, but we also do need to put everything in context. Hospitalizations, while rising in some states, are still 0.08% of the population of Florida and Louisiana, the two states that have gotten the most attention. I'd like that number to go to 0. We all would. I know we don't know what governments are going to do, but do you see the real chance of lockdowns? I'm not asking you to be a doctor or an epidemiologist, but if you're an investor, you've got to think about this, because if you don't think about it, you're missing what could be the biggest economic and earnings part of the entire equation.
Yeah, I don't see us getting back to the lockdown that we had when we had our first go around. I do not think the country, small business owners would tolerate that type of a lockdown. Is there going to be some gray area, some middle ground? Yes, of course. And to get back to that value rotation, yes, value had a terrible week. But the way I look at this, Brian, the value trade it hinges on rates rising. And I think the real reason why we haven't seen the 10-year rise was basically a strategic effort for people to sit on this trade and do the Powell trade. What I mean by that is they shorted treasuries, and they figured Powell wasn't going to be, he had to eventually spark this taper rally. And when that didn't happen at an extended period of time, they were forced to cover and buy treasuries, which the inverse correlation to rates and the underlying, that's what kept a lid on rates. So I do believe we're going to see rates pop further, but people have been looking for rates to rally first before they boatload into the value trade. And that's what I think you've been seeing at the tail end of this week, and you'll probably see more of it in the next 2 weeks.